Welcome everyone to this important discussion. My name is Badal, Malick, and it's my pleasure to moderate this, although I must confess that it's a bit daunting to whittle down such a vast and complex landscape to such a short time. We've all seen COVID wreak havoc in the lives of our fellow citizens, bringing into glaring focus the divide between the haves and the have-nots. This has also included the MSME landscape, despite the recent Atmanirbhar package that was announced by the government last month. And we should acknowledge perhaps that many of these structural problems were there and needed urgent attention even before COVID, right? And so I would urge us not to just see them from a COVID prism, but instead seize COVID as a massive opportunity to address these problems with bold solutions that are desperately needed. So the saying goes that it takes a crisis to drive deep and transformational change, and this can't be ringing truer in the current context. So COVID has propelled all of us to fundamentally change our program mindsets and behaviors, as well as deep clean our institutions. And so I want to share a story in this respect. In fact, today I heard on another webinar I attended that a few years back, a woman in a distressed rural household in Maharashtra suggested to her husband that they should consider opening a tea stall. And the husband laughed and taunted her about the fact that who would drink her tea, right? Who would drink her tea? But nevertheless, she persisted and went ahead by mortgaging her jewelry to get a nano loan to set up such an operation. And they marveled at earning 70 rupees a day, which was the first part of the journey. It was a huge milestone for her. Within a year, she transformed to a coconut and sweet shop close to the temple, the local temple, and which now has become a transport business. Right? So I think that kind of underscores what we are talking about today, and how that story can be not just an exception, but rather the norm. And so without further delay, I would like to introduce our first speaker, Mrs. Leena Johri. Mrs. Johri is a 1994 batch IAS officer. She is currently Joint Secretary at the National Rural Livelihoods Mission at the Ministry of Rural Development, Government of India. And she has, her experience spans across multiple departments and various districts, particularly in UP. Mrs. Johri also has an MSc in Public Services Policy and Management from King's College London. Ma'am, it's my pleasure to have you on this program, and the screen is yours.
Thank you, Badal, and a very good morning, good afternoon, good evening to all the participants, depending from what part of the world you all are joining. And I am extremely happy to be here amongst this esteemed gathering to share my thoughts, our experiences at NRLM, and especially in the COVID context, which you just mentioned. And we keep on listening to the story that you shared. We keep on listening to them on a daily basis through our state rural livelihood missions. So to start with, I would like to say thank you to the World Bank, lead at Krea University, and the team in the ministry who have been organizing these series of webinars. I think these are very useful, and they put the current situation in context to whatever all of us are doing together individually in the present situation. And as all of you know, that National Rural Livelihood Mission is not a new name. It was started in 2011 and has played a significant role in reaching out to 67.8 million households across the country. And those households have accessed close to $25 billion credit from the banks. Beyond social mobilization and financial inclusion, National Rural Livelihood Mission has also demonstrated the potential for rural women to come out to become first generation entrepreneurs. So perhaps the story that you were narrating was a first generation entrepreneur, which she happened to be because of her grit and determination. And apart from these individual micro entrepreneurs, we also help in scaling up the existing businesses of the entrepreneurs who are already part of our SHG ecosystem. The livelihood interventions in NRLM, both in farm livelihood and non-farm livelihood, as the program suggests, is focused on supporting enterprises across a broad spectrum, starting from a very small individual enterprise and going up to a bigger farmer producer organization or producer enterprise, whatever you may like to call it. Currently, we have 1 lakh plus small businesses supported under a program which we call Startup Village Entrepreneurship Program, SVEP, and it assists in these enterprises having an income from ranging from 6,000 to 12,000 per month each entrepreneur. At the same time, we have facilitated forming of farmer producer organizations. At the moment, we have 156 plus, and they are supporting more than 2.5 lakh SHG members. And increasingly, the focus in our mission is to support businesses that are able to generate employment in the rural sector, rural economy, spurring the rural economy. And slowly we are moving towards formalization of these enterprises that are formed in these unorganized sector. And as you understand that, seeing this slide, you can see that we have 86,000 PGs, which are small unorganized groups, which and out of these 86,000, 12,000 are market facing. And during the COVID situation, they have played a human service, delivered human service by ensuring the supplies of fruits, vegetables, cereals to people, not only in the villages, but transporting them from the rural areas and serving the nearby urban areas also. And they improvised on their own, developed small mobile app services, and ensure delivery to the doorstep also. So this is where we see the enterprise entrepreneurial scale, which has spanned out on its own in these difficult times. However, NRLM as of now has limited examples of working with the private sector, but it is taking root. So, for example, can I have the next slide, please? So there are engagements with Olam International for basmati rice in the state of Haryana, arrangement with ITC for co-branding of agarbattis in the state of Orissa, agreements with e-commerce platform, e-commerce players like Amazon and Flipkart, and different financial products are also being devised so that it assists our FPOs. Agreement with Samunnati Finance for supporting FPOs through a Section 8 company, which is there, which is called Foundation for Development of Rural Value Chain. And we have for the product development, we have FDRVC is engaging with Rangasutra. So slowly we are going the engagement with private sector is also happening, so that it assists us in understanding and realizing the potential of these SHGs and linking them to higher economic returns in their journey of growth. And as these women-led enterprises mature, there is a growing demand for high quality business advisory services, access to innovative financial products, modern technologies for optimizing business processes, and facilitating access to new markets and opportunities for them. So this is where we are aiming at, and I would like to share a small picture of what they have done minus all the private support. So this slide I think will be very interesting to show you that COVID has affected all the sectors of Indian economy, including the rural economy, micro enterprises. Whereas several of these micro enterprises, you see the figures here, that they have done great job in reinventing themselves by producing masks, by producing protective gear for our public health workers, sanitizers, hand wash, and even running community kitchens to say. And this was done most hygienically and in the most organized fashion, started with Kudumshiri in Kerala and then was copied in all the states, be it Jharkhand, Bihar, Uttar Pradesh, wherever we have seen influx of migrant populations in large number. So this was just to show you the scale and the capacity of innovation and the capacity to reinvent themselves, which was ably demonstrated by our self-help group members. And as we rebuild, it is extremely critical to engage with new partners and such as impact investors, social enterprises, fintech firms, e-commerce players, incubators, and other mainstream private sector to design shared value initiatives at a scale. So this thing which is happening in an unorganized manner, we would require similar these special interventions so that they are able to link themselves with the market in a more stronger fashion. And we expect that private sector to introduce us to solutions which will enable the self-help group women entrepreneurs and which will lead them towards a transformative path. And as we all understand that private sector is privy to new technologies, more efficient ways of customizing product, business development services, understanding market trend for new product development, so and so forth. So these are the areas where it will be really, really useful for us to engage with. And the sector also boasts of a breadth of experience which can fruitfully be harnessed to strengthen our rural enterprise development initiatives. And as we understand that any engagement, it has to be a total buy-in by both the sides. So from my side, I would say that SRLM would like to engage with any partner who recognizes the fact that benefit should accrue to the self-help group women. And we would want to ensure that the ethos of women network, the decision making and ownership of women across the network and business should be respected. So these are the things which are the baseline from which we want to engage with. However, on our part, we would like to assure our existing partners who we are engaged with, and the likely the new ones who are to emerge or who are likely to develop as we engage with them, that working with SHG women, these FPOs, these PGs, these community-based organizations will be not only be a very fulfilling proposition socially and financially for all of you, but I would say emotionally too, because it is this aspect which keeps us going at National Rural Livelihood Mission, the huge team which we have here with us. And it is important that in this context that private sector should right size, I would say, its expectations. Some of the businesses might take some time to gain, to come to be established, but I am sure with the rigor and with the SOPs which we deal with and which we try to guide these self-help group movement, it will eventually see the light of the day. And at the end of it, I would like to say that these are some of the happy pictures which we are sharing with you. Not only these show the pictures of can you close that window? Show the pictures of enterprise which you see right on the left hand side. The women on the scooties are the banking correspondents who go from door to door and deliver the financial services right at the doorstep. So, and these are the Didi's canteen and so forth. So these were some of the pictures. I wanted to end my conversation today. And once again, I would like to thank World Bank and the Krea University lead to have given me this opportunity to engage with you, to interact with you, to share my thoughts. And I'm looking forward to an engaging discussion today. Thank you, one and all.
Thank you very much, Johri ji, for that great sort of presentation. You really, made it very evident what a great platform to engage with the SHG, the NRLM is. And I think you really set the stage for what we want to discuss. I think there's probably no better laboratory to put into practice some of the ideas that hopefully will come out of this session than the NRLM ecosystem. And I think, in particular, your focus on public-private partnerships to harness private sector innovation and efficiencies is really heartening. You also, clarified, 3 key inputs to what is required for sustainable micro enterprise growth, and namely those are creating market linkages, creating the enabling finance to grow, and both for growth capital as well as working capital, and as well as some of the capabilities, be it design or human capital skills. So thank you very much, and we look forward to continuing this discussion with you. Onwards, we will now start the panel. I think now we also have from 3 to 170 participants. So I think we have more than a quorum. I would like to start by setting context. I just want to repeat something that I said in the beginning, which was that I think COVID is it kind of puts glaring attention on the divide between haves and have-nots. But I really would urge us not to see some of the structural problems that we want to discuss in a COVID, through a COVID-only prism, because I think they have existed from pre-COVID times and they need to be addressed, for more than one reasons. COVID can give us the opportunity to drive deep and transformational change, right? And that has to do with changing in mindsets and behaviors as a result of a crisis, and also an opportunity to clean our institutions. So having said that, let me set up some context. I wanted to share some broad insights on the MSME sector, particularly zoning in on micro businesses before we start, because I think these are going to be quite relevant to what we will be talking about. So I just have 2 or 3 slides and I'll just walk through them. So just to sort of bring everybody on the same page. The MSME segment is a very large one. We're talking about 63 million units that employ altogether 110 million workers. That is over 20% of the total workforce of India. 50% roughly are rural, the other 50 are urban, you could say. 38%, so MSME as a segment accounts for about 38% of national GDP and over 90% of retail value. 20% roughly of the MSMEs are owned by women, right? So that, again, the discussion topic for today. There is a huge missing middle, which basically means that we have in India an unusual fat long tail of informal, unproductive micro business that is led by non-educated entrepreneurs. If you think of this in terms of 1 to 5 employee firms, they comprise 95% of total firms. If you think of it in terms of annual turnover, 80 to 85% of businesses account for less than 10 lakhs a year. 98% of women-owned businesses are micro in scale, 90% are informal. So we're talking about a fairly large chunk of the segment here in today's discussion. As well, aggregate employment is concentrated with micro business, right? So if you look at 1 to 5 employee firms as a whole, they account for 70% of total employment. 1 to 9 employee firms account for 80%. If you look at this in contrast, 1 to 5% firms account for 50% of employment in Indonesia and less than 25% in Mexico. If you look at the US as a developed market, firms employing less than 50 people account for only 27% of employment, right? So, this is very important to understand. There is a formalization gap, right? And so if you look at global evidence, including evidence in India, it suggests that jobs are being created by young formal enterprises run by educated entrepreneurs. These are your classic startups. Very few formal firms have ever operated informally, right? And among micro-level firms in India, older firms actually have fewer average number of employees than their younger counterparts. So again, these are very counterintuitive, nuggets of data that need to be understood to really get a hold of what's happening. Now let's look at finance, right? Only 8% of MSMEs as a whole are able to access formal finance. Only 15% are registered for GST. If you take the total MSME credit demand estimated at around 45 lakh crore in 2018, only 55% was provided by the formal sector. That is in terms of value. And only 33% was in the name of the entity. The rest was invisible in the name of proprietors. The remaining 45% is estimated to be unmet demand for finance that is sourced through informal channels that are typically twice as high. Now, another interesting nugget, if you look at NPAs for micro businesses, they are lower than those, they're lower for micro businesses than they are for small and medium-sized businesses. So you take PSU banks, which account for the largest 60% share of all formal finance flowing into the MSME sector, the micro business sector, sorry. This was, the NPAs for these tranches was to the tune of 11.7% versus 17.7% for small business and 29.2% for medium businesses. So what we're saying is that micro business NPAs for PSU bank lending are like a third almost of your medium businesses, and yet there is such a paucity of capital. So these are questions that we should ponder on. These are questions that we should discuss today and think about as we have our discussion. I want to kind of also just provide a short teaser on a study that is lead at Krea University is conducting. It's a Gates Foundation sponsored study that is in partnership with the World Bank. And the study is to understand how women-led rural enterprises are coping with COVID and understand what mitigation strategies or coping strategies they are adopting. It has been conducted across 4 states, Orissa, Chhattisgarh, Bihar, Madhya Pradesh, and the sample is, it's at 685 of 2000 is the target sample. 685 is what this data is based on. The profile of businesses are less than 2 employee, operating across manufacturing, services, and trade, 3 to 5 year old vintages. And just to share, 4 nuggets. 16% are permanently shut down, another 20% are temporarily shut down. So basically over one third are non-operational as of June 23rd. Operating businesses, so the key challenges that we are hearing is that there is weak customer demand, and also challenges with sourcing raw materials. Operating businesses, that is the businesses that are operational, the 64%, those are earning only 25% of what they were earning in pre-COVID period. And cash in hand to sustain is really 40 days on average, and almost 50% of these businesses have had to draw from personal savings that are dwindling. So that should give us good context to move on. I will stop sharing the screen now, and I want to introduce our panel. So I'm going to introduce our panel briefly, and then I want the conversation to take shape, and we will I'm sure it'll let's I want to spend more time on that. Sanjay Sharma, MD of iFinance. iFinance is a new age finance company that uses alternative data technology and industry cluster enterprise models to provide business loans to micro and small enterprises in 18 states across India. Second, we have Srinivas Ramanujam, who is CEO of Villgro Innovations Foundation. Villgro is one of India's oldest social enterprise incubators, supporting innovators and social entrepreneurs during their early growth stages. Since 2001, it has incubated over 315 enterprises, which have generated around 4,500 jobs and touched the lives of over 20 million people. Smita is co-founder and CEO of Rangde. Rangde is a peer-to-peer financing platform that connects individual social investors to a community of curated micro-entrepreneurs across the country, enabling low-interest credit for the livelihoods and education needs of its target communities. And lastly, we have Maneet Gohil, founder and CEO of Laltain. Laltain is a B2B startup connecting 1,800 and growing rural artisans to global retailers. They skill micro-entrepreneurs in villages who work with these artisans to create contemporary designs and create efficiencies in the supply chain of the craft sector using technology. So with that truly fantastic panel, let us begin. Srinivas, I would like to start with you, if that's okay. Given your in-depth perspective in helping social enterprises navigate the treacherous terrains early on in their journeys, how do we identify entrepreneurs and businesses that thrive as distinguished from businesses that survive? And how should one think of allocating what is limited public and private resources across those two groups?
Thank you. Hello, everybody. It's a pleasure to be here and share some of our learnings at Villgro. So, while we've been working for 20 years, it's been a journey where we've sort of seen what's worked and what's not worked, and we narrow it down to about 7 points after going through these 300-odd companies. First and foremost, I think what's important is what's the kind of idea that the team is working on. So, and connected to the idea is the kind of insight that they have about the solution, about their markets, right? The third is the team by itself, both from a perspective of the commitment, initiative, and to some extent, the credentials of past experience. Right? The fourth is the way they put together the business, how they're reaching markets, how they're working across. There are a few other aspects like whether they're, whether they're investment friendly and so on. I would ignore that. For the purpose of this particular webinar, I think what's important is the team good, motivated, strong? Do they have a sound idea? Third, is there a strong insight on why it would work in that community? And the fourth is the kind of business model. And within the business model, what we look for is it scalable, is it replicable? Right? So, because in the past we had started working a lot with grassroots entrepreneurs. Those were making yarn, making machines, or things which could stay and flourish inside communities. And then we started looking at those which could scale and go to across communities to different geographies. And I think that's an important aspect on what kind of aspects of the business are transferable to another geography, and identifying what is transferable and what is not. What stays unique to geography is an important marker. So it's those 4 things that if one kept in mind, we really can be able to identify whether an enterprise will flourish or whether it could be doing well in their own space, within their place, but whether they will really thrive, bring others in.
Sorry, I'm just going to cut in there. One, I think your volume is a little low, so I don't know if you can move a little closer to the mic, but I think it would help the audience. I just wanted to, so what you described, I mean, it makes sense, from a regular urban or formal startup kind of view or lens. Do you see the same kind of model applicable to the micro business, the rural women-led micro business that, for example, Leena ma'am was talking about, NRLM, SHG-based micro enterprise, for instance?
It does, and I'll tell you. There's this company that we've worked with in the past called Tamul Plates. They are based in Assam, and they work on making degradable, disposable plates from Arakanut leaves. Yeah. So when they started, they were able to work in one part of a bunch of villages. Now, what is interesting for us and what helped them actually get to more parts was their ability to outsource production, the ability to then move into a place where they could help a new community buy some equipment which could produce these same plates. Set in some kind of protocols and standards to say that the plates which are being produced and provided were of a consistent quality. Right? And Tamil Plates then stepped back into seeing how could they ensure all that which was being produced was sold. Right? So they were able to sell some domestically. They were also able to find someone like a buyer in Australia to whom they could export. So the moment that demand got created, a small a setup, it is not in Guwahati either. I think they're in Bongaingaon or Naigaon, right? A really small place. They were able to replicate the model to each small town nearby and do this, right? So it's equally applicable either in an urban setting or a rural setting. It's depending on how you're able to get that marker and what you can transfer from one place to the other. Does that make sense?
It does, and so, I mean, do you think that India needs to think about, this distinction, right, and not a one size fits all strategy probably does not work across the board, right? Given if we really want to create jobs and productivity, then do we need to start, really distilling and finding these, high potential growth oriented businesses and then, target the bulk of resources to them?
I have a slightly ambivalent view to that. Because I think there are two models which work, right? There are some areas like just the example that I gave, where you could just transfer it, right? You could replicate that the entire structure to another location, and you could create more jobs. And then now it's like a monolith. The other area which India has experimented a lot with, and I think we've had mixed success, and the places have been much better, is the way you're able to aggregate supply demand, right? And the FPO, FPC models are similar to this. But I could go on about it, but I'll let me just pause at this moment and sort of summarizing. Yes, it is possible, not just the monolithic, but also the other models. We'll come back to it later.
Sure. Okay, so I think the aggregation piece you mentioned actually is very important, and that's a good segue, Maneet, to you. This Laltain is creating desperately needed market linkages for many rural women entrepreneurs in the craft sector, and you're connecting them to mainstream buyers, even global buyers. What impact have you witnessed for your partner businesses? What are the markers of success specifically? Which entrepreneurs succeed and which entrepreneurs are you seeing failing?
Sure. Thanks a lot, Badal. Thank you for this opportunity. I represent a company called as Laltain. With my company, we work with rural artisans, skill them to create better products, contemporary products, and take them to global retailers in a B2B setup as a wholesale. Now, interestingly, what has happened post-COVID and in this world of COVID is that a lot of artisans whom we work with are the micro entrepreneurs, eventually whom we skill to utilize our technology and designs to create better products. the demand has been falling apart, right? And a lot of, and there has been a sudden change from the retail footprints wherein a lot of demand has not been going to these artisan clusters. Overall, what we have realized is that, I'm giving an example with an artisan who is into an embroidery. Her name is Shamli, and she has a self-help group with 56 women on the outskirts of Delhi. She has her skills of embroidery, which are of no use right now unless she gets to deliver an order to a big retailer or a design house. But at the same hand, right now, it is very important to upgrade the skilling for such kind of artisans like Shamli and micro entrepreneurs like Shamli and other artisans, which can eventually create different products, an alternative set of products which can earn revenues for them. As an example, if a sewing machine is provided to her, then she can also create masks, which are in huge demand across the country, as Leena ma'am rightly put in one of her presentations. And also she can create bags out of jute, which are in huge demand. I'll give you some buyer perspectives now. We work with retailers and SMEs globally, which are spread in different countries. One of our retailers is in Melbourne, and primarily they have been procuring small fabric products from us, but more of jute products from China. But with COVID, what has happened is that a lot of export buyers have restricted their orders to get them from China, and it has eventually led more opportunities for India wherein we can sell these products to these retailers. And that's what we have been doing with this Melbourne buyer exporting them jute. Or in other returns, there is a big upcoming demand from ethnic wear and home furnishings primarily from export market and ethnic wear in tier 2 and tier 3 cities, wherein big marketplaces like Myntra, Pepperfry, Zambon, and Amazon have almost hit the numbers what they were achieving pre-COVID. So in a sense, there's definitely a need of upgrading the skill sets of the micro entrepreneurs to skill them to create more alternative products which can earn revenues, so that as you rightly mentioned, that 1/3 of the businesses and SMEs and self-help groups have already closed their shops. I think such that it doesn't happen in that manner. I think that's what our perspective has been over the last 1 quarter.
Understood. I mean, that's interesting. So you actually are also, demonstrating how a aggregation platform can help them weather a shock, right? By changing the pipelines, two different types of buyers, which is an interesting perspective. Moving on, Sanjay, wanted to get, coming to finance. I mean, your NBFC has financed many micro businesses' economic transformation through multiple waves of financing. And so how do you see, say, different stages of growth, right, or moments of truth in the early journey of a young informal business, especially across informal, and how important do you think is formalization in particular to this process?
Thanks, Badal, for and let me just get into the question straight away. We are a commercial entity, an NBFC that lends to micro enterprises, both in the rural and in the urban segment. And we have lent to over 300,000 micro enterprises. What we find, Badal, is that for women entrepreneurs, and it's interesting that you mentioned that 20% of the businesses are owned by women, because even in our portfolio, there are roughly 20% businesses where we have lent to, where women are the first or the primary owners of business. Now, see, for many of these businesses, which are first entrepreneur businesses, there are two very important things that they have to get a handle on. One is getting their business development or marketing linkage right, where to market their product. And the second often is the funding. I completely agree with what Maneet said, that one of the requirements in this scenario is that market where they sell has to be established, and some of them to re-establish that market, because those markets have vanished. Now, some businesses run by women are fortunate where they are running a trading shop or a grocery or a kirana shop, as we saw in the photos earlier. they probably will probably find their customer once things open up. But then there are many women I find which are in the job work sort of work, where someone provides them the raw material, they manufacture the end product, and someone then sells it also for them. So they haven't seen those market linkages. And an example is in the South, there are lots of women who run power looms where someone gives them the raw material, the silk and the design, and they weave the sari and then they sell it back to, or give it back to the same person who then markets it. Now for these sort of women entrepreneurs, they will have to figure out that where do they get an alternative market. And it's therefore very important to figure out how can they convert themselves and keep themselves afloat. While initiatives like making masks, etc., are very good and immediately keep them occupied, but ultimately, if you are looking at the initial period of 3-4 months, we'll have to start looking at how to reset their markets, find them new markets where their skills can be deployed. On funding side is where I can speak a lot more. On the funding for a new venture, it's always important to have some extra funds, and women often have not really borrowed enough. Thanks to the MFI industry, at least the women have started borrowing, but I think at this juncture in this disruption, making sure that we have some funding available to them. And I think typically I would think that the ticket size of lending will probably drop, because most of the enterprises will learn to live with 60 or 70% capacity utilization for some time. And therefore their requirements will also reduce. And therefore, from a lender's perspective, we have to reduce our ticket sizes to many of these enterprises and cover many more enterprises instead. And I think that's one very big challenge for the country, because transmission of funds to this segment is not smooth. There's a lot of concern about the credit risk in this segment, and which is hampering the speedy movement of funds to this segment.
Sanjay, just one quick follow-up. So given the NPAs, data that we saw, right? I mean, how do you make sense of that with your assessment, what you just said, that there is on one hand risk, the risk profile of the sector is greater or perceived to be greater, but NPAs are actually lower.
Sure. Well, excellent point. I think I would also push for that point, that when the typical loss rates in other parts of the industry are 16%, 17%, and micro enterprises show 12%. In fact, we find that in our customer base, the NPA rate is even many times lower than 12%. It's unfortunate that there's a feeling that there's a lot of credit risk in this segment. Actually, in this segment, the challenge is the ticket size is small, so it needs a lot of hard work. And the margins therefore get whittled away because of the unit cost of providing a loan. But credit risk is not the killer in this segment, but still if you read the press, you'll find that every segment or every bank or financial intermediary seems to be worried that the micro and small enterprises are going to face the biggest challenge. Micro specifically is considered to be a high risk area right now, and that is somehow preventing funds getting into this segment. I personally believe that it's a very robust segment. It works on very frugal levels of funding, and therefore this segment has a better chance of emerging from this problem and still continue to contribute to the overall GDP. So I completely agree with you. I can't reiterate that point more.
Great. So Smita, you can have the last word, at least in terms of these opening comments. You yourself are a woman entrepreneur, and you've created this very fascinating peer-to-peer mechanism to source finance from a network of well-meaning citizens and social investors in the form of these small ticket low-interest loans. So much like what Sanjay has been talking is the hour of need. I would imagine that it's important for you to target these funds really effectively, so to deliver maximum impact. How do you tell us about your borrowers, their struggles? How are you able to help them? How do you measure and evaluate impact?
Sure. So thank you so much for having me here. And I kind of agree with, listening to Leena ma'am and then Maneet and Sanjay, whatever you guys said, kind of beautifully dovetails into what we do. Basically, we're a peer-to-peer lending platform and we connect individuals, we call them social investors, and we enable them to lend to communities who need access to credit. And the way we reach out to communities who need credit is through partner organizations. And that is when we have also been exposed to a lot of work done by the state rural livelihood missions, because a lot of our partner organizations are also implementing agencies of certain projects of the state rural livelihood mission. And we have seen that, when we are able to connect urban Indians with people who actually need access to credit, and we are able to do this through a transparent platform, there's a huge trust that is built between these two communities, and that's like really fulfilling to see. And the fact that even during this current crisis, liquidity crisis that exists in the sector, our social investors are still continuing to lend money to communities that actually need them, and this has just been fantastic. And as Sanjay was mentioning, even though predominantly the communities we serve are considered to be high risk, data shows something else altogether. And even during these times when things have been so difficult, we have seen some of our repayments getting back on track and people continuing to repay. So that's been some of our experience, and it's just been amazing to see that.
And Smita, what is your view? Because peer-to-peer financing, even regulatorily, is a relatively new construct for India, right? And we are currently going through a period of liquidity crunch, right? And this was even before COVID, but COVID has definitely exacerbated it. What is the role for P2P financing, and how do you see P2P as a channel scaling, particularly in the context of the need that we are all talking about?
So in peer-to-peer lending, the source of capital is usually individuals. Because of the regulatory construct, it's not really institutions who lend through the platform. And since these are individuals, they're not really as affected by the current liquidity as institutions. And especially in a model like Rangde, where the whole idea, so we are not guaranteeing very high returns to our social investors. The reason why they still come to the platform and lend are two reasons. One, they're able to track their impact, see where this money is going, and they're able to, in some sense, also connect with the individuals who they are lending. I think this goes a really long way. To give you an example, when the lockdown happened, we received a few distress calls from small and marginal farmer communities across the country. And they were hit because the lockdown was unexpected and they had already harvested their greens, and they needed access to warehousing. And our partners felt that, there was a fear of distress sales because, they didn't have enough cash flows to take care of themselves. So we intervened with interest-free loans then. And our social investors, helped us raise funds in a record time. This was a very small pilot of 10 lakhs for this community of farmers in Yavatmal. But soon we started to see this snowball into a movement, because we started to receive, calls from partner organizations, FPOs from across the country. And now that, 10 lakhs has almost become 7 crores. And all of this has come from individuals. And for me, that's the power of individuals, and what this beautiful, peer-to-peer lending model can actually establish, can help establish in these times. And the fact that India has been very progressive in this, I think it's a beautiful piece of regulation that helps us in some sense, get individuals to participate, but for the communities who are receiving it, it's still formal credit, because technically we are an NBFC P2P. So our borrowers still end up getting credit scores, and it's as good as borrowing from any financial institution.
So Smita, I want to, because this is a very interesting topic, and I'm just going to go a bit deeper on it. So one, my understanding is, reading your material, is that you are able to provide low interest loans. And if you can talk a little bit about, kind of how you're able to, reduce the interest rates, which obviously means that it's affordable for a lot more people. And also, is there a regulatory dimension here or an ecosystem enablement dimension here that is required to kind of really open the gates for P2P to be much more visible and, a force to reckon with in the Indian MSME financing ecosystem?
So in terms of regulation, we are not bound by any regulation. So as a platform, we are able to decide what interest rates our borrowers can pay and what is the return that a lender can actually get. So these are all determined by the platform. But what works for us is the whole principle with which we design our loan products. So we don't have a one-size-fits-all sort of a model because our communities and demand is very carefully curated, and we work across sectors in the livelihood space. We are able to design these loan products. For example, the interest-free loans that we are doing for the small and marginal farmers, there is just one bullet repayment at the end of 6 months. So depending on the need that the borrowers have, we are able to customize this. Sometimes it's EMIs, sometimes there's a moratorium, and then they start to repay the loans. All of this can actually be decided by the platform. And as long as we do this transparently, the regulation only mandates that the lender and the borrower be informed about this. And as long as we do that, we are able to design this. And we have seen that when we are able to curate this and provide credit with dignity and respect, we also see that the capital is able to help communities use this effectively, and we see a lot more progress on the ground.
Great, thank you. So now everybody's had kind of like at least an opening salvo. So now let's go into around where anybody who has something to say can speak. But one issue I want to bring up is, so somebody mentioned jobbers, right? A lot of what we call micro business is, and particularly women-led micro business, are jobbers who essentially get this is what needs to be done. Here are real raw materials. Here, let's put this together, and you get some piece rate, right? Based on the number of pieces you put together. That is not really entrepreneurship at its finest and what it can be. So how does one, how does one really think in terms of, how do you bring them, how do you get them to climb up that value chain, right? And improve terms of trade for them. Maneet, maybe given that you definitely kind of probably look at this and have seen this from close range, maybe starting with you.
Sure. See, at the end of the day, it's very important to create that impact, and the impact can only come if you can facilitate more business to the micro entrepreneurs and the artisans, at least with my understanding of the craft sector. And there are a couple of things in which it can be done. First is in terms of skilling them to create a right product which the demand or the market can also accept, and not the traditional products which are not in demand, right? So you need to create more market linkages, right, innovative market linkages where this products can be rightly adapted. People can adapt these products. More about contemporary designs. Now, even though a lot of design studios and organizations in different parts of the country have been trying to do this, creating designs and design a value chain with the artisans, but it's very important to create more efficiencies in the supply chain to source these products in right qualities even when they're made out of hands, and give it in good quantities to global buyers or domestic buyers. And at this time of in the last 3.5 to 4 years, something interesting which has happened is that even small villages which do not have access to internet or electricity for 24 hours a day, people do have access to 4Gs and affordable phones. And people, though are illiterate, but still though they have understanding of how to communicate on a WhatsApp or do TikToks, PUBGs, or even Instagram, Facebook. I think that is what has been changing a lot. And I think that's what at Lalten we have been focusing in terms of creating technology levers wherein we can create more efficiencies in bringing the supply chain at a better, in fact, more efficient from sourcing the products from the artisans to buyers either in India or outside India. I think in that way we can bring more scalability and volumes for our artisans. And eventually, again, as I started, it's all about creating more impact. More impact can only happen if there's much more business turnaround with them. So I think that's what is the focus right now. Apart from skilling, I think creating new levers of technology which can create efficiencies and scalability in the business for them.
So that's a technology view. Anybody else? want to add to that?
Just to add to Maneet's view, and before I start, let me just say that I don't completely agree that a jobber sort of work is not entrepreneurship, because these women have employees, they have employed people, they are doing a large part of the business cycle, but probably not the marketing end. I believe that in this new scenario, although this is a slightly longer term, because I believe the problem has to be solved immediately for the next 3 months or 3 to 6 months, and then we have to look forward, saying that what exactly can that lead women entrepreneurs into. I believe that on a longer term perspective, the fact that a lot of business now has moved to digital and not face to face, and digital doesn't mean only e-commerce, but even using a phone, using any telecom media in terms of or a WhatsApp to do business, are all digital ways of doing business. And I think women always found that they were at a disadvantage when it was a face-to-face interaction needed. And that's one of the reasons why they were never focused on market-led or business development-led businesses. Now, this disruption actually brings parity on that. It negates that benefit that men entrepreneurs used to have. And long term, if they learn from it, they learn how to do digital business, how to speak over the phone, get their speak to their suppliers, speak to their buyers over the phone. This will be a very big learning for them, and it will give them confidence to move from just jobbers into actually full-scale manufacturing and selling. So I think that is a great opportunity that has arisen. Also, I think for many people who have been lending in this segment, they've been using historic documents. So if you have last year's bank statement or something or the other, or some data about your production, with this disruption, it is very important to know what exactly is the person doing immediately. So what they did 6 months back does not really matter in this for a lender. And I think that's again use of digital traction. So anyone who can keep track of what they are buying, what they're selling digitally would help. And I think women have a big opportunity here in the longer term. In the immediate term, I think the focus should be on finding out that does their product really sell. If they are into an essential product, that's great. Or if they are into an essential trade like a grocery store or a pharmacy, etc., it's great. But if it's not, they have to be nimble in terms of moving to a product that they can still manufacture using their skills. And I think the example that Maneet gave about using instead of embroidery, they can move somewhere else is very relevant immediately. And someone has to fund them. And I think there are lots of people who believe in the fact that this is not a high-risk segment. Women typically have always had lower delinquencies than male-run businesses. And I think we've seen that in the MFI segment. So there is an opportunity there which can be leveraged.
Interesting. Great. Srinivas, I mean, on that note, I mean, so if, Sanjay suggested that if you're a non-essential business, then there is currently a need to retool, reskill. But in general, I mean, adaptability and the, ability to reinvent oneself is a key entrepreneurial trait. What do you, in your experience with the kind of business profiles that we're talking about, what kinds of support are most required and when? And, a second part to that question could be, I mean, we are seeing an onslaught. I mean, there are incubators about everything now, right? I mean, the Atal Innovation Mission has launched an incubator program. I mean, I think it's important to kind of clarify what are best practices around such strategies, right? Like, for example, if Leena ma'am mentioned, NRLM, if one were to house, an incubator, to support the lakh plus businesses that they have spawned, how would you think of going about that?
Thank you. So I'm just building on what Maneet said. Of course, that at some level demand is required. You're making something which is relevant. But let me base my answer on some work that we've just started at Villgro. There's a program that we've launched called Powering Livelihoods. And our premise has been that when in rural communities you're working, there's some level of ability to do work that you have and you're equipped to do it, right? So like we spoke about sewing machine, and because they have a sewing machine, they can now do some work. Likewise, there are, the fact is, our biggest segments in this country are agriculture, right? Textiles. They're massive employers. Now, what is the kind of equipment that can go in and create? That's what we've been exploring and we are doing. So we are supporting enterprises today which make sort of small scale food processing equipment, right? Which can help, which can equip an SHG, which can equip an FPO. We are working with enterprises which are recreating, making more efficient, better spinning machines, right? So these are all large employment opportunities and can feed into the larger economy. Yeah. So what we've seen, and I'm building on what everyone has said, is at some level enabling this, right? So there's a level of capacity. There's also this level of able to improve productivity and reduce drudgery. Yeah. So and the fact is, whether you take agriculture, where I think 48% or more are women, right? In many of these segments, it's women. But the one area which is not an issue, which is an issue, is in assets, whether they own the asset. And so that's something that we're also exploring along with this capacity building, is how do we enable them to own it, right? We've just started talking about whether we can build a guarantee product for it, right? We spoke about in these times, you have no credit history. So then how do you kickstart lending? Like how do you kickstart confidence in such entrepreneurs? You have now some kind of an asset. You have some work or value addition happening to food produce, happening to textiles, happening to craft. And there is some collateral, there is something there. And we are exploring whether we could make a guarantee product which kickstarts folks to lend. And in fact, there is a precedence for this. 25 plus years ago, the MFI industry started because someone gave a guarantee to the MFI industry. Similarly, if there was a guarantee product for borrowers like an SHG and a GLG, it is again going to kickstart. So there are two aspects that we are actually doing within Villgro, within some enterprises, is to see how we can improve capacity such that productivity goes up, number two, such that it reduces drudgery, and three, to see whether we can improve credit quality by giving some level of assurance on credit, right? So there is now an incentive for a lender to give them money, and after that we withdraw. And so as long as the first cycle gets off.
Just pushing that a little forward, what about management, modern management techniques, for instance? I read somewhere that, there's evidence that, just a simple toolkit for monitoring and evaluation, targets setting, operations management, talent management can lead to a 25 to 30% boost in productivity. Have you seen that? Are there, somebody, we had also talked about frugality and, kind of efficiency of capital use, etc. Do we feel that there is, is there slack, and is there kind of a genuine upside for, such tools to be, digitization, of course, but even just, management 101. Have you seen?
So there's one area we've seen. Yeah, so there's one area. There's been a little bit of work. We haven't completely consciously worked on it, but we see that it's needed everywhere. It's just about, at some level, basic bookkeeping, accounting for how your money is coming and going out. Right? So, because I'm personally an advisor to a non-profit which is working on empowering women, right? Women entrepreneurs, and helping them get financially independent. One of the things that they've worked on and it's significantly improved outcomes for women entrepreneurs is to know how much money is coming and how much money is going out. Can that, that one small tool itself just starts giving confidence that they're in control. Yeah. So even before getting into things like managing human resources or business, many of them are very savvy, street smart, and India has been called the land of shopkeepers and everyone is a business person. Everyone's hustling. But this bookkeeping aspect is something which can really put more control in their hands.
Sure. Okay. And I'm sure Sanjay and Smita would love to see that bookkeeping because it enables their lending decisions as well. Sanjay, formalization. I think you skirted that one. So again, I mean, formalization and also in what we were just discussing, is there an organizational kind of view to this? I mean, should are there certain kinds of cooperative structures, for instance, that are important? Again, for jobbers to be able to reap some of the the risk-based rewards. What's your take on that?
Yeah, thanks for reminding me. But you're right. That formalization is absolutely the direction that micro businesses should move towards, and women-led rural enterprises should definitely start looking at that. And by formalization, it means a few things. One is that they get into the normal formal economy, and it may be either through borrowing, it may be through getting a GST registration for their businesses, or registering at the government sites. And that, I think, is the direction that everyone should be moving towards, because I think the future of the country is in formal systems. We can't continue to say that, oh, we take a lot of pride in that, in the fact that there are 60 million unorganized micro enterprises. I think 95% of the 63 million is unorganized. I think we have to start moving. And I think a lot of work has been done by in terms of the SHGs and the cooperatives, etc., that have come in. And I think they should move people into formally getting into the GST set of GST or digital economy, so to speak. We have a great platform of the Aadhaar, the mobile payment, etc. And so I think that it's time to start leveraging it. Now, it will not happen easily. And to give you a sense that it's easy to say that, let's give them a tool and they will learn. And in iFinance, we also have developed a free app that they can download, where they can keep a quick track of how many employees attended today, what sort of raw material do they have. And it takes a lot of hand holding to even get one person on board and for them to start using it. It is a challenge, and it's not a small challenge. But I think with COVID problem, as I said, that people will be forced into using digital payments. It's like at our home, my father is, who's about 85 years old, is now beginning to start to use e-wallet or a UPI-based payment. So I think it is forcing a lot of change in that behavior. On digital and formalization, two things that are important for the women entrepreneurs to learn. One is how to receive payment. So someone has to teach them in simple terms that how to set up their own QR code or whatever is the way of receiving payments, how to make a payment to a vendor, which is not very difficult if we develop simple mechanisms. Second thing is that how do they handle platforms, market platforms, or e-commerce platforms? How exactly do you go about setting yourself up in that? These are two skills that we need to develop in everyone.
Does anybody else want to add to that topic before we move on to the last one, before we then do Q&As? Okay, I mean, the tech geek in me has to be, kind of fed. So I need to ask this question, but I think it also is relevant here. But, we're at an age of, we're in an age of artificial intelligence, right? And AI, it thrives on large data sets. And, I mean, India is, in that sense, we're a bit late to the game, but we have, I mean, we do have strong native advantages in terms of scale of data, messy data, so on and so forth. So here, with respect to small business, whether it's about the identification problem around different, kind of who succeeds, who does not, prediction, or even in terms of finance and based on alternative data. I mean, everybody has a smartphone. The smartphone has 14 sensors. I mean, there is like a trove of, we're actually, the highest guzzling data consumption guzzling country, I think. So is the micro business landscape, which is again 98% of your entire MSME, ripe for AI-based technology? And how are you each, whoever wants to take this, using AI to your advantage? Maneet, you want to go first?
Okay, so my direct answer is that today we are not utilizing any of the AI technologies to create efficiencies in our business. But I'll just give you one very interesting example of how, and I totally agree with what Sanjay did mention, that how the rural part of the world of India and the artisans, women entrepreneurs have eventually adapted themselves. Over the last 3 years of our operations, initially we have been working on majorly operational kind of work, right? Trading, taking products and calling people and then doing this. A couple of years ago, 2 years ago, we gave them 6,000 rupees smartphones to 30 of our micro entrepreneurs back that time, and installed WhatsApp in their phones. And they immediately adapted using WhatsApp, even though they were not very literate. And with time, they were proactive to tell us that they have also explored how Instagram and Facebook are to be operated. And that has eventually led us to scale our business by almost 4 times, leveraging WhatsApp at that point of time. From the operational hustle we were doing to only utilizing WhatsApp to do communications and trading. And with time, WhatsApp has also become a necessary evil because it's not a tool to trade. It's a tool to basically do peer-to-peer communication, actually. And that's where very sector-focused tools and technology have to be utilized. And that's what we have been up to creating this part. But I'm very sure that once the micro entrepreneurs, so I also have a dilemma in my heart that why would a micro entrepreneur use my mobile application when they already have a WhatsApp? But I think that the key to here is that once a micro entrepreneur or the artisan understands in using that it creates a benefit or a value in terms of monetization or sustainable income livelihood to them, they would do everything what is required as they explored how Instagram or Facebook is also to be operated. So I think in that sense, we are little young in that sense in utilizing AI. But as we would be scaling up, maybe we would definitely look forward to utilize that as well. But I would love to hear from Sanjay at the scale at which I finance, how AI is helping them.
Yeah, I think I'll be brief. See, we do use a lot of AI because lending is the most suited industry for artificial intelligence, it looks like. So I think, and in segments like this, it is quite important because there's very little data in a formal way available. So you don't have balance sheets, you don't get, even bank statements do not contain transactions. So the only way to look at it is to use alternate data and use AI. I believe that, when we started using AI, I always believe that you need big data, you need millions of data points. And I'm very happy to have found that even with 50,000, 100,000 data points, you can have a machine learning model or AI model. It may not be very as effective as a model with millions, but it's a start. And you learn as you go along, and you see some very interesting insights once you start using it. So it has relevance definitely in lending, tremendous relevance for the exclusion space.
Can you, without disclosing confidential information, can you give us a sense of what commission rates, for instance? What sort of?
See, for example, it may look like a trivial example, but when we started the business, we used to, even for grocery stores, which is a cluster that we also lend to, and it's not a very difficult segment to lend to. We also lend on the manufacturing side, which is a tough segment. Grocery stores, we used to actually look at the inventory, look at the top 10 sale items, do a Pareto analysis of, that how much is their sale, etc., etc. And it was a cumbersome process comparatively because there was no other data to go by. Artificial intelligence has led us to a stage where just knowing that is it on the main street or is the shop in the residential area? What is the area of the shop? Is it being run by the woman or the male member? What's the age of that? These sort of data points can tell us how much to lend. And believe me, today we don't do the inventory check at all. There's a photo which is taken. We see the density of inventory. We see the area of the shop, where is it located, some other data points, and there you are. So it has become so simple that technically, if I wanted, someone could stand there, take a photo of the shop, speak to the customer, take a few data points, and one could say, yes, here we can give you 100,000 rupee loan. So data analytics can really help there.
Very interesting. Smita, anything you want to add, both on the sort of digital efficiency side or the AI data, play side?
Use too much of AI. I mean, not yet started at least, but from a technology point of view, I think the ease of use, I think, is like the most important for our communities. And we have seen this when we have done our financial literacy programs, which are very, it's designed in a way that it brings about behavior change. And this was a small pilot that we did, and we were trying to see what it would take for women to start accessing their bank accounts. And we realized, there's so much friction for, women to even access their bank accounts, from, how far it is to the way the entire banking system is designed. And then luckily, we've been so fortunate, the India Post Payments Bank came into existence. And that has been a revolution for the communities that we work with. And that's a classic example of how technology can serve, the last mile, because that's one bank account where you don't need to sign. It's completely powered by biometric. It's in fact, and you don't have a debit card, you just have a QR code, and it's just made banking and financial inclusion so accessible to the communities we work with. I think that's a great example of technology in the last mile, and that's really helping us even to ensure that, our lending is digital in the communities that we work with.
Right. Okay, fantastic. So I think that we don't have a lot of time, unfortunately, for Q&A. So maybe a couple of questions, and then we'll hand it over to Adarsh for closing remarks. So one question is, how many women enterprises have you encountered working on farm-based enterprise or FPO supporting enterprises? Is it a significant percent, or does it remain male-centric? And in brackets, other than pickle making and papad making. So Srinivas, maybe you can try answer this, and then maybe Smita, I don't know if you have anything to say on this.
So yeah. Sorry, this is Srinivas.
Carry on. I'll come in later.
It is, of course, it's not a massive majority, but we have seen enterprises founded by women. One I know, which is based in Kalahandi district, working on poultry supply chain, working with micro entrepreneurs on one end to sell poultry, on the other hand, working with small farmers to help them grow chicken. I know of one more, which is based in Siliguri, which is getting together small farmers to grow heritage rice varieties, right? I know one more person who is aggregating textile clusters. All are women-led. Textile clusters to ensure that they create handicrafts or handloom material, and they've been selling to large global buyers. So while there are not too many, there are women entrepreneurs in different aspects of the economy, and I think they're doing quite well.
Smita, do you want to add to that? Or?
Yeah, our work with women entrepreneurs has been mostly with individual entrepreneurs, not really with FPOs. FPOs has been very recent, where we have started to work with small and marginal farmers. But I don't have any examples where these are being led by women. Of course, it consists of a lot of women, and of course, there's nothing wrong in pickle making and papad making if it, helps become a successful enterprise. So I don't see anything wrong with, enterprises that are led by women and that are into pickle and papad making. So, yeah.
Okay, one more question.
I want to come in here.
Yes.
Because, see, we have 176 FPOs led by women who are sitting in an NRLM ecosystem. And Sanjay ji, I would like to, I was very interested when you were mentioning about the different products. So maybe offline later, I would like to understand how different products can be curated for the self-help group women so that they can have more traction with NBFCs and likes because the rate of interest is generally very high, whereas for enterprise, if it is a very high rate of interest, it is not forthcoming for the entrepreneurs per se, and more so for the women-led entrepreneurs. So 176, and they are range from pickle making, papad making to dealing in cashew, hill broom, maize, commodity trading, so and so forth, and dairy value chain also. And they are doing brilliantly, especially the dairy ones are performing very well. And the NPA with NRLM SHG is 2.3%, which is, as you were mentioning, these micro enterprises which we are having. The NPAs are small, but then it's very difficult for them to leverage loan from the formal sector. So this is what I wanted to add.
Great. I think on that note, we will probably have to end. I think, Leena ji, to thank you for that. And what I'd like to say is that this is like the perfect, SWAT team to bring on to NRLM. I mean, you have Maneet who can create market linkages. You have Sanjay and Smita who can, direct channels of finance, and Srinivas who can help kind of create, skilling and retooling and incubation support. So I really hope that these dots are connected and that we're able to really, advance the micro business funnel, because I really think that that is a potential that we still have to harness in this country. And I think NRLM is as good, as a chance we have to do that. So with that, I wanted to hand it over to Adarsh, who's a senior agribusiness specialist at the World Bank. Adarsh also happens to be a friend. In fact, our children are good friends. So I'll hand it over to Adarsh. Adarsh, the screen is yours. Thank you very much. Thank you to all the panelists for joining us today. It was a fantastic discussion.
Thanks, Badal. Really rich discussion. I think, I sort of want to try and pull together a few points. I think first, with the National Rural Livelihoods Mission, I think the World Bank, has been a partner with the mission from very early days. And for us, it represents a huge resource. I don't know what the current numbers are, but I think it's somewhere near 40 million, north of 40 million women, or probably even higher by this point, who are organized into SHGs. And that's a tremendous database of women and lending data of those women, from which to promote sort of enterprise and enterprise growth, particularly given the kind of inclusion issues, Badal, that you flagged right in the beginning. I think we looked recently at the food processing sector in great detail, because that's something I work on quite closely, and we saw that about, you showed the statistic at the beginning, about 20% of all enterprises, according to NSSO 73rd round, are women. But when you get down, when you look closer and look at the breakup between what is called own account enterprises and establishment enterprises, and establishment enterprises are those that have a fixed place of business and actually employ non-family labor. And I think when you get to that cut of businesses, women only represent 5%, of those businesses. So I think, using NRLM as a base to enhance inclusion, of women, enhance women, growth of women-led enterprises, I think is critical. But that being said, the World Bank also engages from a different perspective. We work with the MSME ministry on two areas. I think that point you made about separating out COVID emergency response and what might be longer term structural foundational issues that remain to be addressed, whether there's COVID or not, I think is an important point. So we are working on an emergency response of enhancing the credit guarantee mechanism to kickstart, lending flows to MSMEs, through CGT, MSC, and other credit guarantee mechanisms. And then we have a slightly longer term engagement with the Ministry of MSME, where we are designing a program to support competitiveness and productivity of enterprises. In fact, it's called RAMP, Raising and Accelerating MSME Productiveness. And I think there, I want to flag sort of, 4 or 5 issues that have come up in this conversation that I hope sort of, gets carried on further. I think first, public programs tend to think that you can give things to firms that help it do better. Globally, we see that the most effective things are things that, sort of improve the overall business environment. Things like infrastructure, power, regulatory services, labor laws. Without that kind of facilitative environment, direct sort of services or things that you do to firms can only do so much or not do anything at all. And I think that's a critical kind of space to keep in mind. And this is an area where India is sort of, is a government priority, and governments are working on. Niti Aayog has even done a statewide sort of ease of doing business ranking and so on, and we're trying to push it down further. But I think that holds important lessons, for the kind of interventions that can we look at much more convergence, between at the state and local levels, between interventions that are trying to work with firms, along with programs that work with the state, district, and block governments on issues like infrastructure, land, availability of power, and so on. I think this is something that sort of needs to be enhanced. I think the second issue is targeting. I think there was a discussion where you referred to do you identify growth enterprises, and Srinivas sort of was ambivalent on that. I think again, our analysis in the food processing sector, using that as an example, about 98% of firms are micro, but even within that, the public financing their limited resources. So I think targeting is important in terms of making sure those resources are going to people and firms that can actually use it to grow, because we only have resources to reach probably some small proportion of the overall universe of firms out there. And I think, again, this, cut that 50% of firms in the food processing, 98% of all firms are micro and informal. But of that 98%, a further 50% are what would be called own account enterprises. That means they have no fixed place of business. They hire no non-family labor. And I think it's important, those kinds of typology of enterprises may need very different kinds of interventions, right? I think targeting firm interventions at individuals may be counterproductive. They may need skill upgradation. They may need sort of, more individual focused kind of things. Third area, provision of technical services. And, this is a very critical area. And again, in food processing, we identified 4 or 5 key things that firms needed to access to improve their competitiveness and capability. And broadly, this fit, under, market access, product quality, in this case, food quality and safety, regulatory compliance, and commercial loan applications. And I think this, again, how do we provide these services? How do we ensure a quality of service provision to firms that need it? and how do we incentivize them to actually use it? Because they may not have a culture of using these. And here globally, voucher-based programs have shown success, right? You inculcate the behavior of paying for needed technical services, but also look at things like accreditation and training and accreditation of service providers so that there's a market ecosystem for provision of these. Last, I think the last is access to credit. I think we tend to lead with access to credit issues when there may be more layered kind of approaches, and access to credit may need to come later. Because a lot of firms, food processing firms we looked at, there's such a, compared to some of the other countries we work in, there's such a developed access to credit supply architecture in India. There's priority sector lending, there's massive government support schemes, there's SIDBI, there's NABARD, there's credit guarantee schemes, there's refinancing windows in Mudra. There are innovative market-based players like some of the panelists here today. And really the question is, how do we make the connection, right? There are all these pipeline issues like lack of data, lack of formalization, lack of transaction data by firms that these players ecosystem can use to make risk assessment and lending decisions. And I think again, this is where the NRLM base I think is critical in terms of making that transition, using the database to identify and connect women entrepreneurs to formal sources of credit. But I think my point is these are not, in most cases we found that these are not supply side issues. These are about sort of making the linkage and how to building that pipeline, and that technical assistance in actually building a business plan and a commercial loan application would be effective in making that connection in many cases. So I'll stop there. But I think the next few years are going to be really exciting. I think the government has embarked on a reform program. I think India has many of the enabling conditions in place, for various things to happen, including for digital financial architecture. The question is, can we really bring it together and really sort of, target firm growth and firm competitiveness as outcomes. I'll stop there.
Thank you, Adarsh. I mean, I think that's a great, kind of overall synthesis of kind of everything. I mean, you did the work, my hard work, so I don't have to do that. So thank you for that. And I really hope that I guess you're already connected, and Leena ma'am as well. You're already connected with this group of practitioners, and that this leads to kind of a next level of more tactical planning around what can be done. I'll just end at a personal note because I've recently co-founded a company, and I've been thinking a lot about similar sorts of issues related to the gig sector, in contract and gig worker sector in urban India. But I think I think there are two things that I wanted to end with. One is what Sanjay and others had already mentioned around alternative data. There is so much alternative data available that is waiting to be harnessed, right? And to solve the identification problem, to solve the creditworthiness problem, to be able to lead to better credit outcomes by monitoring risk on a continuous real-time basis rather than kind of a one-time and done kind of basis, which there is so much value on the table to be kind of taken there, both for the borrowers as well as for the solution providers. Second is the area of risk, of trust. I feel, and this again comes back to the NPA story, right, where we have so many preconceived notions around what these segments are and what I mean, and there are media spun narratives often, but when we have been very humbly and extremely we've been startled by some of the insights that we've seen, right? And I think that, you know, in this country we have to recreate or reinvent trust, because trust has been the, you know, the sort of anchor for all sorts of transactional and financial systems that have worked. So I think, I mean, to me, NRLM, women-led, rural entrepreneurs, micro business, it's a prime, kind of ecosystem to think of data, to think of trust, and to really, kind of create a new paradigm change. So with that, thank you everybody for lending your time, the panelists, Adarsh, Leena ma'am, the organizers at the World Bank, lead at Krea University for doing a fantastic job, and all the the members of the audience that listened and asked questions. So thank you very much, and good evening.